Ethereum has outperformed even Bitcoin, delivering a 500x. If you look at Bitcoin's price, and we think it'll be at least 250,000 by the end of this year, if Ethereum price ratio gets to its 8-year average of 0.0479, that implies 12,000 per Ethereum token. If it gets to its 2021 high, which I think is justifiable given how much is happening fundamentally on Ethereum, that's $22,000 per ETH. But I don't think that's the ceiling. Ethereum becomes the payment rails of the future, and so its network value matches Bitcoin. Well, that would be $62,000 per ETH token. So with ETH at 4,100, as you can see, each of these three values represents tremendous upside.
Crypto investors are on edge, wondering if Bitcoin and Ethereum are due for another pullback in the coming weeks. Yet the cycle keeps heating up, and Tom Lee is still calling for a parabolic run into the final months of 2025. While there's forced selling and leveraged bets, it's what we expect whenever an asset nears a massive ceiling. Zoom out though, and the picture changes. Analysts are spotting a historical pattern. Ethereum today is having its Bitcoin 2017 moment, when it soared past $1,000 and finally forced Wall Street to pay attention. Just as Bitcoin did then, Ethereum is now drawing in institutions, hedge funds, asset managers, and heavyweight investors who see use cases far beyond speculation. Meanwhile, Bitcoin has been behaving like a high beta risk asset, and if markets recover, it could rip higher alongside them. If the tape stays indecisive, short-term pressure remains a risk. Price-wise, Bitcoin sits just over 108,000, still down over 6% this month. On the ground, the community is buzzing and adoption is spreading, from DeFi rails to stablecoin infrastructure. Even regulation may be tilting in Ethereum's favor. That shifts ETH from just another coin to a potential backbone for tomorrow's financial future. And as Tom Lee points out, this is likely just the beginning. With Wall Street's deeper involvement and retail energy still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb higher, but how fast it can write the next chapter in crypto history. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
Well, the reason I think 2025 is the biggest macro shift since the gold standard is I got to take you back to 1971. And in 1971, the dollar went fully synthetic. That was the year that Nixon ended the convertibility of dollars into gold. Now think about that for a moment. In 1971, the dollar no longer represented anything except another dollar or a promise to repay. And when we think about that, most people said, well, gold was the trade in 1971. That's true, but it wasn't really the big opportunity. In 1971, the financial system had to suddenly think of ways to make sure the dollar remained dominant, because if the dollar wasn't convertible into gold, another currency could be dominant. And so what Wall Street did was they created a huge market for the dollar. Money market funds, futures, debit cards, mortgage-backed securities, currency swaps, interest rate swaps, index futures, zero coupon, CDOs, etc. That was the innovation that followed 1971. And in fact, 7 of the top 30 largest companies in the world now are financial institutions. What that means is that we now have a new moment in 2025, which is we now have more things becoming synthetic. And so that's why Bitcoin, of course, remains the OG in our view, because you now have a digital store of value. But I think you want to think about the other side of that ledger. What is Wall Street going to do? And in our view, Wall Street is going to play a very significant role in creating a market for digital assets. And in our view, the biggest winner here is Ethereum. So let's think about what it means for Bitcoin's upside. If gold today is at 4,000 per ounce, and maybe it'll get to 5,000 per ounce, well, we want to think about what Bitcoin's Bitcoin to gold ratio is. You know, what percentage of Bitcoin's network value should mirror that of gold? And if it's only at 10%, then you get a $140,000 value for Bitcoin. I think that number is too low. I think it's going to basically match gold's value or even exceed it. And that's how you get to the $1.4 to $2.2 million of value per Bitcoin. So we're still quite bullish on Bitcoin here at around 110,000. But let's think about this other story arc that's going to develop, which is Wall Street is going to innovate on the blockchain over the next 10 to 15 years. Okay? And part of this story arc is, and we've already seen it, is that we're talking about stable coins, which is tokenized dollars. So that's almost like the 1971 moment. But we're talking about tokenized equities, tokenizing credit, real estate, reputation, and eventually intellectual property. All things that are measured in the economy today. So a lot will happen on crypto. And we already know Ethereum has experienced this ChatGPT moment because of stablecoins. Here's just a list of different companies and entities that are building stablecoin projects. And you might wonder, why does the US government care about stablecoins? Well, it's the same reason the US cared about the synthetic dollar staying strong. Today, the US dollar is 27% of GDP, but it's 57% of central bank reserves. That 57% shows you that Wall Street's efforts to make the dollar the standard of transactions after 1971 was effective. It's 88% of financial market trades, okay? But it's basically 100% of stablecoin denomination. So by moving to a synthetic dollar tokenized on a blockchain, the dollar could become even more dominant. And collectively, stablecoins are the 12th largest holder of treasuries in the world. By the way, that's at about 280 billion of stablecoin outstanding. Treasury Secretary Bessent thinks it could be a $4 trillion market, but once stablecoins own more than 1 trillion of treasuries, they will become the single largest holder of treasuries in the world. It's not that far away.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
Investors are a little cautious, but I don't think that's going to change that markets still have a lot of tailwinds into year end. And part of it is AI is like, I think demand is accelerating there. And we know that investors are sitting on a lot of cash, and institutional investors are really having a terrible year. Only 22% are beating the benchmark. So I think there's a bit of a chase. And then sentiment has flipped negative, which is always a contrarian buy signal. So, I think despite this mounting wall of worries, including the shutdown, I think it sets us up for a pretty good rally into the end of the year.
Do you think it's at least changed the game in the near term for the market? The stock market's not going to take that well. I mean, you wouldn't think.
Yeah, Scott, the only thing that I don't know is how many chapters it's going to take to play out, because, there's opacity, which is what is scaring people, but then there's real credit deterioration, which I don't think that's what's happening, and I think that's why Adam and all those had called it idiosyncratic. I'm kind of in that camp because high yield spreads have behaved. So I think it's more of is the flow of capital, because I think one of the biggest sort of allocations for alternatives has been private credit. It's going to make investors pause that, maybe this market it's not as easy a return as it looks.
You told me, I think, a couple of weeks ago that 7,000 on the S&P by the end of the year was realistic. Do you still
Yeah.
think that we could get another 5%? That's what it looks like. It's 5% between now and then. Do we have that
Yeah.
in us?
Scott, I mean, 5% is just an average fourth quarter from 1950 to 2024. But we have the Fed easing after an extended pause. So that's 1998 and 2024. So I think that 5% might be the base case. I bet you it's going to end up being more like 7 or 8% or even possibly 10%. So I think 7,000 is the low end of what we can end the year at.
Wow. And how much do earnings have to do with that?
I mean, earnings are going to matter, but you know, it's been a good start. I mean, we're barely into earnings season. The banks have been good. 82% of companies are beating. There's a lot more visibility of demand and then less concerns about tariffs because we're kind of working our way through it. So companies have a better sort of visibility over the next 12 months. I think the outlooks are going to be good, and I think that's going to help stocks. And you know, I think there's a lot of room for multiples to still expand. So I don't think this market's that demanding.
I think it's interesting that you suggest that you'd be a buyer of regional banks and small caps. Why
Yes.
are you willing to do that? That's not putting your toe in the water. That's like putting the bathing suit on and jumping in. Why?
Well, I mean, Scott, you know, I know there's a lot of muscle memory for people from 2023. And that was because of a big change in rates that really caught a lot of banks offside just in their business model. That doesn't mean that this crisis, which is underwriting being done properly, should have the same issue. So I think that there has been a throw the baby with the bathwater out on the regional banks and the small caps. So yes, I think despite the fact that the Russell had a rough week, I think they're really going to be one of the beneficiaries. I mean, even on earnings basis, small cap earnings are going to grow 48% in the third quarter. That's like 4 times, 5 times bigger than the S&P. So I think there's still a lot of growth left there.
What's the message in crypto right now, Tom? Bitcoin is down today. It's 107,000 right now. What's going on there?
I think there's a couple of things. One is there was a big deleveraging last week because that VIX spike and the tariff headlines triggered the biggest liquidation and deleveraging in crypto ever in history. So I think that people are still licking their wounds. And I think that there's also a bit of gold envy because, as you know, gold has been a huge performer this year. In fact, you know, there's people waiting in line to buy gold. So I think that there is a bit of like, I'd rather own gold than crypto. So I think this is not the top of the crypto cycle, but I think leveraged longs in crypto are near record lows. So I think it's kind of like we're at the basement and working our way back up.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, it's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology, and if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.